Hey guys, Stock Saturday, and it's been a rather good week. Up about 15%, just over 15%, or £71,000. That may not be entirely obvious why to start with on the face of it, but we will get to that. Just comparing to the markets, the Nasdaq and the S&P both broke all-time highs yet again. The money printing keeps going on. Nasdaq up 1.7% in the last 5 days, and yeah, as you can see, sort of broke the February highs. I think it got to 22,200 sort of intraday, and we've rocketed past that this week. And the S&P is up 2.09%, so slightly better than that was better than the Nasdaq, wasn't it? Yeah, 1.7%. S&P is up 2.09%. And sort of back in February was in the mid 6100s, maybe 60 high 6100s. Is now 62.79. So everyone's very, very happy. My portfolio has had some sort of reasonable gains on the invest side. My sort of general stocks portfolio, not really sort of focused on my other niche bets, if you like. Broadcom sort of doing pretty well, $275. TSMC really pushing on now, 234. It was sort of back below 200 just sort of a couple of weeks ago. And yeah, Vanguard emerging markets sort of pushing £50 again. Emerging markets starting to perform slightly, although nothing like the growth of sort of semiconductors at the moment, it seems. Applied materials, that was sort of 137 back down at the lows. BlackRock way above 1,000 again. Some of these percentages are actually wrong because of FX impact. I haven't sort of found a particularly easy way to get FX impact in here. I think I do have it on the option side, so I might have to include that. Ingredient, for example, I think is about 7% in the red for me. Because it's sort of pretty much level on stock price and about 7 or 8% on negative on FX impact. I think evolution, 7% in the green, that is in the red, including the FX impact. And some of these sort of smaller gains are, very slow single digit gains. So, yeah, a lot of people moaning about the FX impact at the moment, but sort of keep saying, without the dollar sort of falling to where it is, you probably wouldn't have stock prices where they are. So it's a bit of a double-edged sword. You can't have all-time high S&Ps at the moment, and no FX impact at all. It probably wouldn't be there. So yeah, that's fine. Got no Q2 earnings this week, and obviously there was a couple of stocks sort of in here, smaller holdings that I haven't covered their Q1 earnings on the channel. Sort of obviously getting a little bit old now. We have just finished calendar Q2, so I kind of thought we would focus on some of the news and bits and pieces that are driving sort of the bigger holdings in my portfolio, and sort of maybe when the portfolio changes sort of dramatically and some of these holdings maybe become larger parts of the overall portfolio, I'll sort of dig into the earnings a little bit more. But yeah, looking at some of the news, we had the crypto miners start to come out with their monthly results. Only had Riot at the moment. I saw Marathon sort of did theirs on the 1st, which was extremely keen. But Riot looks like been sort of having a little bit of a downturn on operations because it's very hot, I presume, in Texas. So yeah, 450 Bitcoin produced versus 514 last month, and they've sold the majority of that, 397. They are choosing to sell most of their Bitcoin at the moment. People criticizing them for making some sort of fairly poor decisions over the last sort of 6 months. And yeah, they've said we make the best, what we feel is the best decision at the time. You know, I think they've sold some quite a bit of bit farms at sort of 80 cents over the last month or two. I think it's now $1.05 already. So yeah, there's a fair few tens of millions of dollars there left on the table, I believe. But yeah, that is what it is. Yeah, deployed hash rate is up 0.1 exahash, so they're not exactly expanding. And operating hash rate is down, average for the month. It looks like because they would have been shutting down for the power credits. So power credits are back, 3.8 million versus 600,000 last month. Demand response credits, pretty much the same. So yeah, another sort of 3 million in power credits, and I would guess that is more, quite a bit more profitable than, you know, mining in the heat, and I think they have to contractually do this anyway. So yeah, all in power cost down to 3.4 cents from 3.8. So that's pretty good. Fleet efficiency stayed exactly the same because they haven't been expanding. And they're sort of not really talking about the AI expansion, which is a little bit, you know, a little bit frustrating. We were kind of hoping they would have been maybe getting towards, you know, at least talking about a deal. I can't imagine a deal is, you know, absolutely imminent, but I hope they might have been a little bit further on than this. But yeah, that was Riot, as usual, sort of slightly disappointing, but we continue to hold. Herein, on the other hand, are not disappointing, and we'll sort of come to them a little bit later on, of course. But they have sort of confirmed before that they have paused Bitcoin expansion at 50 exahash. They reached 50 exahash, and they are now pushing on the AI side. This was a little bit strange, though. Their sort of 50 megawatt site, I kind of thought they were looking to do a CoreWeave style deal that you know, that Core Scientific did, where, you know, somebody else would come in, fit out, you know, a lot of what they want to fit out, provide the GPUs as well, and pay Herein for that 50 megawatt site. I might have been sort of mistaken on that. Obviously, they'll be looking to do that with the remainder of their, you know, large 2 gigawatts worth of power. Maybe the 50 megawatts they're looking to run themselves, I suppose. So they have bought 2,400 NVIDIA Blackwell GPUs. B200, I didn't realise B300s were already out, but there you go. They now have 4,300 GPUs, so it's more than doubled their existing capacity, and should be expanding their sort of annualized revenue run rate relatively quickly, I would have thought. They have said the 50 megawatt site can hold over 20,000 Blackwell GPUs, so there's quite a lot more buying if they are wanting to sort of fill that out, basically. But yeah, it seemed you know, interesting move, pushing on the AI side, and yeah, holding their cheap Bitcoin sort of exahash where it is. So another case of my sort of two worlds colliding. I did originally buy Adecco Agro for the commodities exposure, the sort of soft farming commodities exposure in South America, and then Tether eventually acquired a 50% stake, and then upped that to a 70% stake. So they now own 70% by a crypto stable coin issuer, which does make things a little bit stranger. And I guess owning 70%, they are allowed to sort of make some decisions, and they've signed a strategic partnership for a pilot project to use their surplus energy to operate Bitcoin mining facilities. So yeah, maybe not good for the other miners, of course, adding more hash rate, more you know, increases to difficulty. But yeah, they have 230 megawatts in power generation in total across South America. They use some of that, of course, and they're saying that they may look to stabilise a portion of the energy that they're currently selling on the spot market, rather than sell it, buy some rigs. If you've already got the energy, you're not paying for energy, you're selling it, selling surplus energy. So yeah, essentially it would be zero cost energy, and yeah, potentially adding Bitcoin to the balance sheet, and could give them a little bit of upside. Not sure, Bitcoin miners don't exactly have the highest multiple, even with Bitcoin where it is. So, not sure what this would do to the company. Obviously, they're sort of at I think $1 billion where they are just on their existing business. So, who knows? Some of these companies are going up 10x, 15, 20x just for becoming a treasury, crypto treasury company. So not sure whether they'll want to start pushing into that, but yeah, it does seem being owned by, 70% owned by Tether is starting to give them sort of quite a lot of Bitcoin and crypto exposure. Yeah, Tether's Paolo has sort of given a slightly worrying, I suppose, message for the other miners. I suppose, in the grand scheme of things, at sort of 1,000 exahash, it's not really, wouldn't make a huge difference. But Tether will be the biggest miner by the end of this year. So starting from very, very little to presumably over 50 exahash. I think Marathon have said they want to be at 75 by the end of this year. They're leaning back into expansion. I think they were at 57, so they're now wanting to get to 75. If Tether is saying they're going to create 75 exahash by the end of the year in sort of various companies, I think they have stakes in other companies as well, and part of that may be Adeco Agro. We'll have to see. I think all of that expansion would need a drastic increase in Bitcoin price very soon for the miners to do well, which I am kind of expecting / hoping for, but yeah, it's yet to come so far. This is interesting. Coeur Mining, one of my larger holdings. I had sort of taken down my stake in them a little bit after sort of reasonable profit gain, and they're obviously starting to make money. You sort of showed that in the recent earnings, and that will be continuing with silver price especially expanding, and sort of gold price at much higher than most people would have thought. And so people obviously start talking about dividends. Rather than a dividend, it seems they've started a 75 million buyback program, sort of presumably still thinking that their stock is undervalued. So yeah, rather than dividend it out, 75 million of buybacks. So the company's worth I think $5.5 billion at the moment. So 75 million sort of isn't going to provide a massive boost, but I don't think they have all that much sort of volume go through them. So providing a sort of a steady buyer could certainly help things. I haven't checked the short interest, whether they might start sort of having a bit of an effect on short sellers. Not that you'd get a big squeeze from a sort of gold and silver miner, but yeah, I always think buybacks, if you're not particularly overvalued, is probably the better way. I wouldn't, being an American company, I wouldn't particularly want a large dividend, because it just gets withholding tax, and then paying that is worse than, I wouldn't be paying dividend tax, I suppose, because it's in the ISA, but it sort of hurts the options as well, the dividends. So yeah, buybacks. Let's go. This was very interesting. I hadn't looked into BlackRock owning the 49% of the leasing rights to a natural gas pipeline from Aramco. And it's quite, obviously BlackRock own, an enormous amount of stuff. They have 11 trillion in assets under management. Obviously most of that is, ETFs and debt and that sort of thing. But yeah, they also own this, and so they invested 15.5 billion for 49% of that entity with the leasing rights. Not Not entirely sure if that was in 2021. That was sort of quite a high point in the stock market generally. Whether that would be worth more than that now or less. Didn't seem to sort of get any reasonable concrete numbers on that. But yeah, even if it's sort of worth around close to this, that's nearly 10% of the market cap. If they're looking to sell this, I'm not sure what they would be doing with the money. They've made some acquisitions over the last year, sort of looking to get into private credit and alternative investments and that sort of thing. So yeah, we'd have to see what they want to do with that. I can't imagine that's just going to be a great big special dividend or buybacks. Different to Coeur Mining. BlackRock are obviously at sort of over 20 times earnings. So yeah, we'll have to sort of wait and see if Larry sort of comes out and says what they're looking to spend that on if they were to make the sale. So yeah, interesting. There's sort of people noting how much BlackRock are now making from the Bitcoin Trust as well, now generating an estimated 187 million in fees, surpassing the revenue of one of their most iconic products, the iShares Core S&P 500 ETF. Obviously, the S&P ETF has far more in assets under management, but the Bitcoin Trust is much higher expense ratio. So, I think sort of 5 times the expense ratio of the S&P fund. So, yeah, it's quite easy to make an awful lot of money from it. So, you can see why he's pushing into crypto a little bit more. So what is happening with herein? This does seem to be largely tied to sort of potential AI deals. You've had Riot going up and you've had sort of CleanSpark not really going up because CleanSpark don't have any real sort of exposure to AI. They've sort of said repeatedly they are all in on Bitcoin mining. And at the moment, with the sort of AI, demand and, it being a hot topic, that has sort of meant CleanSpark have lagged behind a bit. Obviously, if we get a very large Bitcoin gain, then you'd expect CleanSpark to maybe outperform people like Riot, sort of with their mixed bag of opportunities. But yeah, at the moment, everyone's talking about CoreWeave and obviously talking about Circle and various other companies as well. But CoreWeave and the Core Scientific deal is front and center sort of for the Bitcoin miners. CoreWeave currently at sort of 5 billion in market cap. A lot of people are saying that they would have to pay quite a bit of premium over that 5 billion to acquire them. They're at $18 at the moment. There was people talking about sort of $25 to $30 a share. Partly because CoreWeave would save an awful lot of money if they have to, if they bought Core Scientific, because they wouldn't then be, or they would own the assets that they are now investing in. So it's sort of strangely you pay more than they're worth, but then you get more than they're worth, basically. If that were to happen, then obviously that puts a lot of value on people like Riot and herein and Cypher and people like that. So yeah, the people with AI capacity basically are sort of going up second hand as a result of this deal, it seems. And potentially other companies looking to invest direct rather than using people like CoreWeave. Yeah, it does look like it would possibly have to be someone else rather than CoreWeave. If CoreWeave do, even if they don't sort of go through with buying Core Scientific, they have a lot tied up with Core Scientific, and people noting balance sheet is strained. They have 8.7 billion in debt, and the quarter one at least was a net loss. Obviously, they're expanding quite a lot, so they're not really looking for net profit just yet. But yeah, financing a $5 billion acquisition or more, potentially sort of $7 to $8 billion acquisition would require either equity dilution, a bitter pill for shareholders, or further debt, risking liquidity. I would say equity dilution, shouldn't be the worst thing, maybe. Stock obviously opened at far lower than it is now. I think they opened at about $40, sort of back at the end of March, sort of beginning of April time, and they're now $165. So yeah, up 320% in just over 3 months. I think if you got a bit of equity dilution to make a large acquisition, that wouldn't be the worst thing. Something Tesla did sort of back in the day. Stock rocketed on EV hype, and they were issuing stock, on a monthly basis, I think. And people were sort of extremely bullish about that because, PE was at a massive multiple, and it seemed like getting $10 billion in the bank for free when they didn't exactly have a huge amount of cash in the bank. So, yeah, CoreWeave being, 8 billion in debt, they could quite easily, I would have thought, raise sort of $5 billion, and share price takes a small hit, but it essentially gives them a very large acquisition. So, yeah, I'm not sure a bitter pill for shareholders is really the right thing. Just checking in on gold price as well. We've sort of, as I say, had a little bit of ups and downs in the gold. Equinox and Coeur Mining and Pan American sort of not really doing a huge amount in the last month, but obviously zoom out and you can see it's still up, sort of heavily up for the year. Mid sort of 2,500s at the beginning of the year, now 3,335, and I expect the Q2 results should look very rosy. Whether people sort of haven't really taken this into account yet, or they're thinking the future won't be bright, don't know. But some of the gold stocks sort of haven't really moved, and analyst expectations sort of haven't really moved, considering they're making a fortune, a lot of them. But it's still looking pretty good. Silver starting to push up as well. We haven't sort of seen silver go with this move all that much. This is the yearly chart, and it was sort of 31 back in July last year. But yeah, certainly in the last sort of months to 6 weeks, it's had a rocket up, sort of $4 or $5, which is good. Iron ore still on this sort of stair step lower, it seems. A lot of people in the Discord are talking about your Rio Tintos and sort of Vale and people like that, previous holdings of mine. But you look at this sort of very nasty looking picture for iron ore, and it doesn't exactly make me want to invest. Obviously, if you go way pre-COVID, iron ore's up since then, but yeah, they won't be making a huge amount of money sort of in the high double figures. Dropped to $93 in the last few weeks, and yeah, unless you think sort of calling this the bottom, and things will improve from here, I wouldn't like to make that call, to be honest. So iron ore isn't something I want to be exposed to at the moment. Whereas copper looking rather nice. This is the yearly chart. It's sort of touching, or did certainly this week, touch very close to the March highs. And if you look on a sort of 5-year basis, it's looking completely different to iron ore. So yeah, on the copper side, still very bullish, and it has the supply demand side, I would say, in favour rather than iron ore. Supply is sort of very strained, and it's very difficult to bring on new supply, whereas iron ore, there is a hell of a lot expected in the next few years, and they're expected to be in surplus. So economic news, there was a reasonable amount sort of towards the towards the end of the week. We did have some June CPI numbers from Europe, sort of basically as expected. Core CPI staying at 2.3%, and headline did move up slightly from 1.9 to 2%. I think EU are sort of saying the strong euro is having a little bit of an impact on their inflation, and sort of could be causing even more disinflation than they're thinking. So they're talking about sort of even more rate cuts, which would be sort of bullish for asset prices. I'm not sure how much euro stocks and things would like it, but yeah, certainly gold and silver, I would imagine, would do well, possibly crypto. Yeah, we had job numbers looking very strong in the US. Wednesday, you got the ADP number, which was minus 33,000. So a lot of people were sort of talking about this as whether this would lead into a bad non-farm payrolls. You did get EU unemployment tick up slightly, 6.3%. That is, with US sort of quite a bit lower than that. That is a bit of a tick up. Whether that again would mean sort of talking about more rate cuts, I'm sure they'll use that as a good excuse. And then Thursday, obviously Friday was bank holiday, so you got an awful lot on Thursday. Continuing jobless claims ticking ever so slightly up, but nothing really that much. They revised last week's down to 1.964, and it was exactly the same this week. Non-farm payrolls, though, 147,000. They revised last month's up from 139. This was sort of quite a bit higher than expected, and obviously is in stark contrast to the negative ADP number. ADP, people have noted, focuses a little bit more on small to medium businesses, and it is actual payrolls data, where the non-farm payrolls number sort of has the birth-death model. People start up a new business, list a new business. That could be for anything. It could be a sort of shell company with no employees that never has any intention to hire any employees, but this non-farm payrolls thing will sort of assume they're taking on secretaries and admin staff and accountants and that sort of thing. It sort of makes assumptions about jobs based on sort of the birth and death of companies, whatever those companies may be. So that's why you end up with these sort of 800,000 revision downwards that you had earlier this year, I think, or late last year. So yeah, it's a little bit of a sort of unknown number basically, but it's what everyone focuses on, and it's very strong. So that was positive, I suppose. Unemployment rate took quite a drastic downturn from expectations. I suppose 0.2% doesn't look drastic, but yeah, when it was expected to rise, and it dropped to 4.1%. A lot of people are saying this has all but taken rate cuts in July, at least, off the table. There was talks they might have a bit of a surprise cut in the meeting later this month, but yeah, jobs numbers looking good, and no unemployment, and inflation sort of not at 2%. I think that's dead basically now. So it'd be September, you would think, before any, the earliest you could get any rate cuts. They are still talking about 2 this year, so we'll see. So portfolio-wise, not a huge change in the ISA. Still got 14,000 of cash. Won't be deploying that, I wouldn't have thought. That's going on the mortgage. Stocks sort of moving up somewhat. CleanSpark sort of not really moving up, as we mentioned. Riot Platforms is doing quite well. Fresnillo, that was open on Friday and did sort of move a little bit higher, so that's good. Silver pushing on, and iron at $16.82, which it's looking very nice in the ISA, but he's looking even better on the option side. On the interactive broker side, basically no no change in there. KGHM starting to tick up a little bit with sort of copper and silver moving at the same time, so that's good. That's a long-term hold. And then the invest side. So this is where the bulk of the gain has come this week. Iron, obviously, as I say, in sympathy with Core Scientific, sort of in parallel with Core Scientific, it seems, are pushing up quite a lot. And that has sort of got it very close to my $20 strikes. Stock's at $16.87, I think it was, wasn't it? So yeah, $20 strike back when the stock was $7 to $8, started to, seeming like a very, very lofty, optimistic target, and now sort of 20, I think, is seen as basically a given. It's how much above 20. So yeah, that does absolute wonders for the options. I do have some, quite a few at $25 strike as well. So $25 still maybe seems a little bit optimistic to some, but I think if they got any sort of AI deal, it would basically propel them to that. They've got 2 gigawatts of power potential as opposed to Core Scientific's 590 megawatts, so over 3 times the capacity, but obviously not at the same stage as Core Scientific's. But yeah, I haven't taken any profit. It is sort of somewhat tempting. Some of these, I've got 5 or 6 positions in the various strikes on iron. So yeah, some of those positions are sort of over 1,000% in the green now, or a 10x, and yeah, some are a little bit less, but I do sort of think of it as an overall position basically. Hive has sort of rocketed up this week, more than doubled. I think that was 12,000 last week. On not a huge amount of gain, to be honest. It's gone from sort of $1.80 to $2.33, I think. But a lot of my recent options buys have been for a $4 and $5 strike. So again, sort of when it was languishing around 180, sort of 190, 170 again, 180. $4 or $5 even doesn't look particularly achievable, but then it rockets up to 233, and people start to get a little bit of hope. They don't have potential for too much in the way of AI, and they are sort of very, very high cost producer, so really would do with a big Bitcoin move. But anyway, the loss is down to 4 figures, which is only just into 4 figures, of course, but very nice after a long time at sort of 25,000 in the red on Hive, so that's pretty good. Core mining pushed up a little bit, not sort of too much, not to enough to make me want to sell anymore. Equinox pushed up ever so slightly, but nothing too much. Similar with Himax, they kind of need some TSMC news, I think, to push them up, because on current business they are sort of at 20 or more times earnings. So yeah, that's they kind of need some news. Riot sort of not getting a huge amount of as I say, news about AI, but the stock is sort of just going up, I think, in line with Riot and with Iron and Core Scientific and people like that. So yeah, the loss is down. The position's up to 9,000, but it's still quite a big loss. Cypher, I think, are probably the closest to a deal potentially, even closer than Iron. They have a sort of facility that's basically ready to go. So yeah, that has sort of really rocketed up. I only bought 40 as a sort of fairly speculative position. I know on Twitter it's sort of a bit of a fan favourite among some people. Mike Alfred, sort of especially, I think, has a reasonable position, talks about them a lot. So yeah, that's it's sort of in a few months up 460%. It's gone very well. I bought CleanSpark a little bit before Cypher, I believe, and that has gone nowhere. It's only just sort of only just in the green, considering these were, I've had both about the same amount spent on them. It does seem AI is the hot topic. So yeah, and cash sort of barely moved. All I did this week was, I think on Monday, was able to snag a very small amount of Hive options, which those ones have almost tripled by the end of the week. So yeah, the options do go a little bit crazy at times, but interesting. Leave your thoughts in the comments below, and like and subscribe. See you soon.